How to board it. Go ahead.
Welcome, everybody, to the final installment of Strategize Me with Comerica Bank Business Sense Bootcamp. And today we have Kevin Watkins, and he will be presenting on financial management for a small business. Welcome, Kevin. And we also have Tim with us today as well.
Okay, Elizabeth, we certainly appreciate you. Thank you so much for that warm introduction. So we're just sorting out a few housekeeping things here. So Tim Evans, he's actually one of our small business bankers at Comerica Bank. And I'm not 100% sure if Tim is going to stay with us. You're more than welcome to stay. Yeah, Tim, you can stay, you can hang out. I'd love for you to hang out if you could,
Yeah, that's
but
fine.
awesome. So yeah, so I am screen sharing. So can everyone see my screen?
Sure can.
Fantastic. Well, yeah, so my name is Kevin Watkins. I'm the External Affairs Manager here at Comerica Bank. I'm also our National African American Business Development Manager. And I'll be celebrating my 20th anniversary with Comerica in June of this year. So I've been here for a little while. And I started off in the management trainee program, then became an assistant banking center manager, then bank manager. I also was a licensed financial specialist, so I was able to sell life insurance, fixed annuities, indexed annuities, mutual funds. That program was discontinued, and I'll be celebrating 3 years in my current roles. So I'll be celebrating 3 years in November. So essentially, what I do is I manage all of our relationships with our nonprofit community partners, and I help to coordinate all of our volunteerism, specifically from a CRA standpoint. And CRA stands for the Community Reinvestment Act. And essentially, all federally insured banks have an obligation to lend, to invest, and to serve in the communities in which they operate. So when it comes down to the investing and the serving, that's essentially where I am involved. So on the investing part, we utilize our grants, our charitable sponsorships in order to empower low to moderate income individuals as well as small businesses with annual revenues of $1 million or less. So that's essentially my role here at the bank. In my business development manager role, I'm looking within the African American community, not just the African American community, but really all communities. But I do have a focus in that area with individuals, entrepreneurs, small businesses, and just helping them reach their financial goals, whatever they may be. So that's when I can connect them to one of our outstanding small business bankers like Tim here, and he can advise them and guide them on various ways in which they can reach those financial goals. So with that being said, I'll let Tim introduce himself, and then I'll kick it off.
Thanks, Kevin. It goes without saying, I know one of the things I can tell you is being a small business banker and having various roles at Comerica. The one thing I can tell you is when you talk to Comerica, you'll hear people saying, "Oh, how long have you been there?" And I say 20 years, and 5 people have been there longer than I have. It's going on my 21st year, so it's kind of like a family. And in Comerica, you can follow certain interests. Like, for example, with me, small business is something that I'm passionate about. I've had small businesses in the past, and it's a way that we can, doing things like this in a way that we can not only give back, but actually provide that knowledge to somebody else and say, hey, you could try this, you could try that. We want to see you successful, because when you're successful as business owners and entrepreneurs, that makes us successful.
Absolutely. So yeah, I definitely appreciate that, Tim. So we are going to get into the financial management portion of our presentation, and specifically what we want to talk about are like different financing options We do want to talk about those. You know, really when it comes to a point of taking on investors, is that the best route for you? So really just explaining that, is it better to take on debt? Is that going to be the best route for you? And just all different types of business financing needs. So we can essentially get right into it. So when you talk about business financing, that is essentially getting the money that you need for your particular business. Invested funds that stay in the business often permanently. For most small businesses, equity comes from the owner or from family savings and is frequently the only source of funds for startup small businesses. For large, fast growing quality companies, venture capital can sometimes be accessed for equity. So you do have debt equity versus working capital. So debt financing, of course, that's borrowed funds that you're going to have to pay back. The cost of debt financing is interest paid to the lender. So of course you want to find the best terms, the best interest rate that you can. But I mean, of course, there's more than that, right? It's not just the particular interest rate that you get on a loan. It's really that entire relationship. You know, are you dealing with individuals that, or a bank, or are you dealing with individuals at that bank that is going to be able to advise you around all different aspects of your business financially? So, you know, you really don't want to just go into a situation where, yeah, well, this bank has the lesser rate, but then when it comes to all of your other needs, you know, such as checking accounts, payroll, merchant services, things like that, they may not be able to help you because they may not be knowledgeable in those areas. So you know, I don't want to call out any specific bank at all, but you really just want to make sure that whichever bank you deal with, they're able to guide you in all those aspects. And whoever you're dealing with, they're knowledgeable, they understand the process, they know your industry, they've dealt with other businesses in your industry. So they're able to guide you. When it comes down to working capital, so of course, working capital is going to be used to acquire funds needed to run the daily operations of your business. You know, you want to think about things such as inventory, overhead expenses, really any of those types of expenses that could be maybe paid off within like 30 days, 60 days, something like that. You know, you're not thinking of long-term fixed asset financing, which that's going to be for purchasing equipment, vehicles, real estate, things like that. So it comes down to, really, are you going to utilize, or do you need a term loan versus do you need a line of credit? So that line of credit is going to be used for those working capital needs, and the term loan is going to be used for the equipment, vehicles, and real estate needs. So I'm sure Tim, he can speak a little bit more about that, but you know, a lot of times you look at what we offer, it may be like a 5-year loan with a 5-year note with a 15 or 20-year amortization, something like that. And then after that 5 years expires, then you can look at renewing the loan at that particular point in time, and you may have to provide financials and things like that. You will have to provide financials to ensure you are able to qualify for the loan at that particular time. Tim, do you have anything you want to add on this slide in particular?
No, I mean, you make a lot of great points. A lot of your things on, like, for example, like on this slide, like your working capital, your fixed assets. You might have a business where let's say you're a CNC shop. So you have two machines that you want to get running, and it's not the raw material that you need. You've got that covered. So a working capital loan might not be right for you. And those machines could be $400,000. So securing those machines to continue your operation, that could be something that you might do, where that's going to be a different type of loan. That's going to be more of a term loan. It can be a traditional. It can also come along the guidelines of SBA. I mean, so there's several programs that I know we have at Comerica that we offer, where you're going to have options to get what you need done. Now, that same company might be doing well and having the term loan, but they know come October they're going to be needing to replenish their supply of material that they're using for those machines. they need to do inventory because that's when they're going to be slow. They don't have time to do it. They're so busy. So having a line of credit in place for that, getting financing for working capital is going to be wise to bridge the gap and get ready for when they're going to be busy and growing. Now they're going to be growing because they have the two new machines and they're going to have the inventory ready to go to meet the new challenges that they face at growth. And that's what you want as a business. You want to have profit and you want to have growth. And these are ways that you can leverage financing to do it.
Absolutely. Absolutely. Now, Tim, you mentioned SBA. So what's the benefit of getting an SBA loan?
Well, generally they have a couple of things. SBA loans have different terms, and as far as like time in business. I know, like for us, I know at Comerica we only do them. You have to have a minimum of 1 year in business of operating income, and that's for loans less than $100,000 or less. Over that, it's at least 2 years, which is
Okay.
a little bit different than a traditional loan. And the other thing too is it's not. Sometimes you'll have loans that are weighted on prime, like plus or minus. If you're approved for an SBA loan, you get the SBA rate, which is usually a pretty competitive rate. So it's pretty affordable financing, comparative across the board. There's a whole lot of advantages to it. If somebody can qualify SBA, it's a good product.
Absolutely. Thank you. Thank you for the
Yep.
clarification. All right. So next, so what are some do's and don'ts for small business financing? So invest your own money. So of course, that's really going to be how you start up your business. You're going to have to invest your own money first, and before you ask for equity or debt from other sources, because if you when you do get ready to ask for equity investing or debt from a financial institution, both parties are going to ask, well, how much skin do you have in the game? How much have you invested for yourself on behalf of the business? It's really going to show your commitment and also shows your skill in running a successful business. So you definitely do want to invest your own money up front. Next, earn the right to borrow. So, of course, borrowing is not specifically a right that you have. It's going to be an earned privilege. So, in order to obtain others' investment, you need to demonstrate your ability to manage debt well and also run a profitable business. And then to go along with that, you need to show profitability. So profits are what lenders or investors want to see. You don't want to let any lax management inhibit a healthy bottom line. So that's always something that you do want to show. Understand and retain working capital. Experienced business owners know that working capital is critical. Um, it's also sometimes overlooked or misunderstood by new business owners. As your business grows, the amount of working capital cycling through that business to support operations should grow. And you always have to stay aware of working capital needed to grow and sustain your business. Next, you do want to be lean on fixed assets, especially for new businesses. New business owners, you sometimes think that you have to purchase fixed assets to start or grow a business, but they're going to consume precious working capital that you need through having to make down payments, having to make monthly loan payments. So what you should do is buy as few fixed assets as possible when you're starting out. When you are acquiring fixed assets, new business owners should consider buying used assets or leasing them as well. And then you also do want to match sources and uses of funds. So when financing, current assets such as accounts receivables and inventory should be financed with current liabilities such as lines of credit or credit cards. Fixed assets should be financed with long-term loans that match the use life of that particular asset. New business owners sometimes make the mistake of buying a fixed asset with short-term debt, forcing them to pay for an asset faster than that asset can generate profits for the loan repayment. I mean, I'll give you a quick example. There could be a new building that you want to purchase that you want to operate your business out of, or you want to use it as an investment, and you have a line of credit available. So you utilize that line of credit to buy the building. I mean, that's not matching the sources and uses of funds, because it is a long-term fixed asset, that is going to depreciate. You should utilize utilize a term loan, to purchase that asset, right? Um, a lot of times when you utilize lines of credit, sometimes the interest rate can be a little bit higher, and it's not fixed. Those rates on those working capital lines of credit, most of the time they're variable. They're not going to be fixed rates. So, it's similar to like an adjustable rate mortgage or something like that. You really want to keep that rate fixed for as long as possible. I know, with us, we usually have like a 5-year term loan. We can amortize it over 15. And then after that 5-year initial loan is up, then we take another look at it and review, and then we can renegotiate at that particular point in time to make sure that you are financially able to take care of this particular loan, this asset, the payment, and we just look at going forward at that time. Next, you do also want to, let me go to the next. I'll go to the next. Well, first, Tim, do you have anything you want to say on this one?
Not really. I think you pretty much covered everything on that. I really I like the idea of investing your own money. At least some having some skin in the game, and it also always depends on what kind of business it is. If you're building something that's like that's more idea based, maybe it's not going to be as much of your own money. I mean, with like Facebook, they all came up with $20,000. It wasn't something that was great. I mean, and there people that invested in them was more, but it depends. You've got to know your product or you're good.
You're true. That's true. Very true. All right, and then next on this one, do's and don'ts. So of course you want to understand your business financing, understand your financial statements. So of course there's going to be an application process that's going to ask for business financial statements like your profit and loss statement, balance sheet, cash flow projection. You definitely need to know those financial statements well and be able to discuss them with a lender. um and I mean, this is not just for getting a loan, right? You also want to understand your financial statement so you understand your business. You can see, all right, well, how much money am I making? Am I truly charging enough? Am I charging what I should for my product or my service? Are costs in line? And then you can use that and really compare it with other businesses in the industry. Are you comparable in price? You maybe can talk to a few other business owners in the community and say, are your costs in line with your competitors as well? Because there may be some synergies that you may be able to utilize. There may be some other ways that you can reduce expenses. So I would say know your numbers for sure, but don't just know your numbers to get that loan. Know your numbers because it's best for your business. Next, you do want to um, understand your collateral options as well. A lot of loans, they're going to require assets or collateral to be pledged as security for that loan. So in case the borrower, if there was a default, the collateral may be sold and make that financing entity whole. So you want to be prepared to discuss collateral options with your lender as well. In a few of those, I mean, most often, it's going to be like cash in an account, real estate. Oftentimes it could be commercial or residential real estate. I have seen where both of those are feasible. And then you look into assets, so equipment, vehicles, even accounts receivables, that may be considered a collateral option as well. When you get into understanding risks and costs for loan types, so there's going to be certain types of risks and costs for each loan. So while a credit card could be easy to use, financing by using that credit card is going to be like one of the most expensive forms of credit. I don't know what the average credit card interest rate is, but I'm sure it's in the high teens. I'm sure you're looking anywhere between like 15 up to 20% or more, right? So unless you're paying that credit card off every single month, you're going to have that's a high cost of capital right there for you. Now this says no grants. There are some grants in place. They are a little more difficult to achieve and to get. But I'll just, yeah, I know it says no grants, but I know there are a few grants that are available. I don't have all the details around that. But we'll see if maybe Tim has some thoughts. Um Shopping around, of course, you want to shop around for the best loan. But like I said, you really don't want to just shop a rate. You want to shop everything that you need. And really, whatever institution you're working with, do they have the expertise to help your business grow? Can they help you in other ways? Accounts, merchant services, investments, personally, do they have the plethora of services in order to allow you to grow as a business and as an individual? And then once again, get expert advice. So you can get mentoring and advice with the SBA. Don't rule out banks, especially ones where you have a good working relationship. The FDIC also has educational resources as well. A few other good options could be the Michigan Small Business Development Center. That may be a good option for individuals as well. You look at CMURC, Central Michigan University Research Corporation. They are a resource within itself, right? So you really just want to utilize every resource that you can from reputable sources. All right. Tim, you got anything to add on this one?
Yeah, I was just going to touch base on the no grants. I think what that's more along the lines of meaning is grants are not a source of your financing, because when you get a grant, let's say you get a grant for $500,000, that's not a loan. It's usually for you. There might be conditions with it, but that's for your business, for operating your business, or it could be for a specific thing to your business. I know there were grants in Detroit that we were my supervisor was working with a company where they were providing the person that had the building, the business, if they paid a certain portion, this grant would pay 60% of the cost for a new driveway. Mm-hmm. So it was a grant. It's not a loan. And if you're using it, you can't use a grant for income as opposed to for obtaining financing either. Because in most cases, unless you have some kind of contract that says we get this guaranteed grant, it's more difficult to get financing from a grant. They're great to have. If you were to get a grant, I mean, if I had a business that was going to get a $500,000 grant, I would be very happy about it. But that's not going to be your source of funding. That's going to be the source that's going to help you generate your real income that's going to provide your true heart of your financing.
Absolutely. Absolutely. And then Tim, if you could take this slide for me, I would certainly appreciate it if you could.
Oh, sure. Yeah, I can tell you, like, having a business plan, when you're having a business plan, it depends on how first off, that's going to be executing everything. I know when you talk about the whole group is like financial management, your financial management is going to have your business plan and your executive plan in it as well. For example, if you're looking for source funding from, let's say, from people that are going to give you buy into the owner's equity, or they're going to do some venture capital investing, they're going to want to know the executive team and what you're all about. That's going to be included in your plan. They're going to want to know what you can afford. Now, they're going to be forward thinking because they're saying, hey, if I'm taking a risk on this, I think there's a chance that we're going to make money. But having that business plan in place in general is going to let you know what you can afford. Studying your financial statements. I know on one of the previous slides, I didn't mention it, but I know Kevin mentioned it, touched on it a little bit. For your financial statements, make sure, and I know I would recommend it, and I know everything that I've read on the U.S. Small Business Administration says, invest in good accounting software. Quicken, whatever you are comfortable with, but make sure it's good financial software. Because number one, that's going to eliminate, a lot of times with that, people say, well, send it over to my accountant. Well, if you have the software ready to go, it's going to help you with payroll. It's going to help you with taxes. and it's going to be easily every month to reconcile and send that to your accountant. It's just good business. You don't want to fall behind in that. And if it means you have to say, hey, what can I afford? Let's take a step back, and we're not going to buy 5. We're only going to buy 2 to move forward. Whatever you've got to do to make it work, take slow steps if you have to. And all of these things are really good advice. Checking your credit report to know if, for example, like if I have somebody that's applying for a business loan in certain products, I'll say, hey, I'm just letting you know the minimum score is 660 or the minimum score is 720. They should know that, or at least be around the ballpark and say, well, hey, I think I got a 740. Let me check. A lot of people have access. I know I have access. I can go on my phone and tell you what my credit report is. And it really doesn't cost me anything, but it's pretty easy to do to know where you're at. Establishing your collateral options. I mean, that could be a number of things, including equipment, a building. I know we mentioned that in a previous slide, showing your equity contributions. Like, what have you invested in the business? What have you put in? And it doesn't always have to be money. I mean, if you're keeping track of what you're doing, say, hey, I thought of this idea. This is what I wanted to do since 2010. And I put over 5,000 hours into this. If you put that much time in it and you're presenting it to somebody, people are going to know that. They're going to know what you've done, and they're going to realize the hard work that you put in. It's not just about physical cash, in my opinion. It's about the whole ball of wax of what you're doing. And I would say research your financing options. Like Kevin said before, sometimes you might have a bank that's really strong with the lending aspect and the business aspect, but you don't care for it for certain reasons. You might be in a better position to say, hey, you know what, I'm going to pay 0.25% more on my interest rate, but I'm going to be saving because I can have a high yield money market on my business, or something along the lines of that, where you can say you want to look at everything before you decide what you want to do and what's best for you, because it might not be Comerica or a traditional bank. It could be a credit union. I don't know. That's something that you're going to have to look into and really seek others' opinions. I mean, obviously, like Kevin or myself, anyone that is in a position that knows like the products and services that you might need, they can be a good recommendation. But for you don't want to come to us with your accounting questions. That's why you want to have the good software and know who your pros are and who's on your team.
Yep. After you.
Okay, I can keep going. Okay, so like I said, your business plan is, if you're executing that business plan and you have, I can just tell you right now, for us, the elements of the loan package, the business plan on our end, you're not going to be presenting us with a formal business plan if you're coming to a bank for a loan. What we're going to ask you for is simple things, which is going to give us a picture of you personally. We're going to ask for a personal financial statement. That's going to include all your assets, all your bank accounts, all your real estate. It's going to kind of give us an idea of what your net worth is. And your business financial statements, for example, let's say you're trying to purchase a building for $300,000. Well, we're going to want 2 years of tax returns, personal and business. We're going to want the personal financial statement, and we're going to want your intern statements. Why would we want your intern statements? Well, you had a good year last year, and you had a good year the year before. Well, we want to make sure you're having a good year this year. I mean, and the more the loan is, the more critical they're going to get on that. So having your those things ready are great things that are going to help establish your credit worthiness. And there are times when sometimes questions will come up along the lines of a business plan or what you're doing. If they see an anomaly, the underwriters might see an anomaly and ask a question: what's going on with this number? and you say, oh, well, that was equipment and that was a loan off of owner's equity. And then they ask for a statement of the owner's equity. There could be something along those lines where something didn't make sense to them. And now you give them the whole picture because you were on top of things with those, the personal financial statements and your business returns and everything that you provided, that it's really easy for you to get that or make a phone call to your accountant and get that information handily. And it does tell a story.
Yep. One thing I want to add here, just like Tim said, when you come to a traditional bank, you won't need a business plan. But if you are a startup or if you have credit challenges, you might want to go to a community development financial institution, and they fill that gap where traditional banks, we can't lend to startup organizations, we can't lend to credit challenged businesses. So they most likely will have you submit a business plan with your loan request. And so and I remember speaking to the president CEO of one of our local CDFIs, and he said like a mistake a lot of people do is they create the business plan just to get the loan. Create the business plan for your business. That's essentially like your playbook and your rule book of how you are going to govern your business from all different aspects, from a marketing perspective, from a sales perspective, to how you're going to operate as a management team. So I really encourage everyone, don't just create that for to get a loan. Create that for your business and know that's how you're going to run your business. All right, Tim, you want this one or you want me to take it?
I can. This is pretty simple. This is pretty straightforward. I deal with these.
Yep.
Uh, Source of the amount of the owner's contribution, credit report, collateral. I'll give you an example, like for example, a collateral purchase, like I've dealt with, especially in the business loan center, was a lot of times you'd have. I know one time we had a trucking company purchase about 8 trucks. So what do we need for those? Well, we needed a collateral. We need to know where they're closing. A credit report is definitely going to be pulled on any owner that is over of the business that's over a certain percentage. I think up to 85% of the business has to be covered. Or if you're in a traditional, I think anyone that has over a 20% owner equity stake. So they're going to be getting all of that information, personal, all of the. But for example, with a vehicle, there might be a component where you have to have 20% down. And I've seen the ones that have had to have 20% down for whatever reason. Now, see, and this is something that I know our underwriting team does. They try to do it as a traditional loan and come to find out, well, they can do it as a equipment loan SBA. So they're doing it, and the process is a little bit different. You still need the titles, but it's not the same as. So there's different requirements. Although some of the same things would be true. You'd need a purchase agreement, like for a vehicle, or if it was a building, appraisal contracts. If it's a commercial building, you're going to have an environmental survey. There's a whole lot that's involved, but honestly, if you're coming to this point where you're in the opportunity to move forward with something to that, I say it goes back to having your good financials ready to go. Because if you do, and this is something that's expanding your business, it's not something to be worried about. It's something to be excited about. I just real quickly, when I first started with the bank, we used to take local tax payments for businesses. And I had a business owner that was paying like $40,000 in taxes. And I said, oh, that's got to be tough to do. And he goes, I wish I was paying $150,000 in taxes. And I'm like, yeah, that makes sense. That means you're making a lot more money. He's like, exactly. So there's always, I mean, nobody loves paying taxes, but that is a really good point. So, I think the loan packages are something that uh, uh, are pretty standard. I mean, and these are going to be pretty similar. And really, in working in retail or in commercial and in consumer, they don't look a whole lot different. You know, as far as size, I mean, like a traditional mortgage is, in a commercial mortgage are pretty extensive. It's a lot of paperwork too when you're closing.
Yep. Okay. All right. So yeah, so now when it comes to qualifying for a loan, so these are some criteria, right? So you have the good credit score, an equity contribution, repayment ability, loan to value ratio. So of course your credit score, that's going to give a history of how you've managed your debt for at least the last 7 to 10 years, right? So a good credit score is going to tell a lender that you have the ability to manage and repay your loan. Equity contribution. So that's going to show a lender that you have commitment to the project and you also have the ability to earn, save, as well as manage your money. Also, when you talk about equity contributions, I don't know if you've heard of the 5 C's of credit, but the 5 C's of credit, those are important because they let lenders know that you have the credit worthiness to repay a particular loan. And also they can that can help lenders make informed decisions about loan approvals and terms on your behalf, right? So when you look at it, you're looking at character, capacity, capital, collateral, and conditions. And I believe we've talked about collateral, we've talked about capital, right? So capital, that's essentially this equity contribution. Um, and then we have character, capacity. So character and capacity, do you have pending lawsuits? Have you gone through any litigation in regards to your character when that's concerned, right? And also your credit. That's also a main determinant of your character as well. The collateral we talked about. So that's all the equipment, the real estate, etc. And then of course different conditions of the loans, interest rates, um, industry conditions. Really what's going on in the economy right now. What is so Tim, you talked about trucking. So how is the trucking industry right now? Is it conducive to making a particular loan? And so yeah, all of those things come into mind when you think about qualifying for a loan. Repayment ability, of course, and then loan to value ratio. So a lot of times lenders, they want a loan to be between like 70 to 90% of the market value of an asset, sometimes a little bit lower. When you look at that, it could, if it's like investor real estate, I think that's around 60-65%, something like that. But of course, an appraisal is going to be used to determine the maximum loan amount for that. You got anything to add, Tim, on that?
Yeah, the only thing I would throw in there is also know what your credit utilization rate is, your debt utilization rate. That's really big, and it's something that I've been burned by not at times for not stressing that more. You could have somebody that doesn't have very much credit, but they're very wealthy, successful business, and well, I only have one credit card, and it's for $10,000, and I use it and I pay it off every month. Well, if we did a business loan for you, and the only revolving credit you have is a credit card, and when we run it that day, it's maxed out. Your
Mm,
your utilization's 100%. That's not going to be good, even though
yeah.
you can totally afford it. Now there's some things, now that's just for business loans. Because somebody, and I'm just going to say, because you're talking about trying to get your business off the ground and some of the things you can do to find owner's equity. If you, for example, like I can't get a business loan because I haven't been in business loan. One of the ways that you could get a loan is if you have equity in your home. You could get it's a personal loan, but it's a way that you can get equity if you needed to do that and go that route. I mean, there's ways that you can, you can generate the capital that you need. I mean, it's a different way, but you always can look for options uh, to make it work until it works. I mean, until you really got it going. But I think the most important part of all of it is having the good financials, and all of these things are important too.
Mm-hmm. Indeed. All right, Tim, you want to take startup financing?
Sure. Startup financing. Um, there are. I know there's one in. I live in Genesee County, like Genesee County, Lapeer County, Oakland County. They have like groups uh, where you can get up to funding. It's not loans. I mean, this is more grants, but it's where you're presenting your business plan to them. So you're going to have your equity, your sweat equity, all of that going, and however you generate your equity. But your sweat equity, that's just your labor. For example, like let's say your business that you're starting up is you worked in heating and cooling for 5 years, and now and you've always had your van and did it on the side, but you want to take the plunge and do it full time on your own. Well, actually doing a lot of heating and cooling jobs or doing a lot of plumbing jobs is what's going to build that equity. That's going to grow your bottom line. So if you're doing that out there busting, a lot of times when you're doing that, what you might want to not, what you might want to remember to do is make sure you're marketing yourself well. How are people knowing about you? What do you want to put your equity in? You've got only so much. Hey, I know that I can generate a business by using social media. I can use LinkedIn. I can use just what ways do you want to use it? I think is very important. As far as family goes, if you are going to borrow from family to help a startup, I don't see anything wrong with it. But what I would propose that you do is make sure that you present them the same business plan you would if you were presenting it to, because I think it's going to show that it's going to go back to the character. It's going to show that you have character, and you're not just trying to say, hey, this is my whim. This is something I'm really serious about. Take a look at my business plan. And I'm sure that that's a selling feature to family. And as a way around it, business credit card. I think having a business credit card is good. You just got to be careful with it. I mean, it is a more expensive form of financing, but I mean, sometimes it can be needed. Um,
Yep. Thank you. All right. Next, we get into like looking for a loan. So of course you can go out to a bank or a regional lending organization. I do want to also mention for credit challenge businesses as well as startups, community development financial institutions as well. They're going to be good options for you. And some people might ask, okay, well, if I have a CDFI, well, what do I need a bank for? Well, you still need a bank account. You still need a checking account in order to process transactions. You still need to pay your bills. You still may need treasury management services to pay funds to vendors, or also receive funds from your clients, your customers, merchant services. I mean, there's just so many different products and services that you need from a bank, beyond that initial loan or that initial startup capital. So even if you do go the route of a CDFI, community development financial institution, you still need a bank in order to do all of those other things, right? So their banks will be able to help you with those financing options, but also all those other services. And then like Tim said, once you get that 1 year in business, banks, we may be able to do a like a SBA guaranteed loan for you. And then after 2 years in business, you may be able to qualify for traditional bank financing. And it may or may not, the SBA may or may not be needed at that point in time. Um, when you look at regional lending organizations, So once again, there are lots of nonprofit community development organizations. They have revolving loan programs. So you can actually check for, once again, like CDFIs, the Small Business Administration, Small Business Development Centers, SCORE, Women's Business Centers, Veterans Business Outreach, as well as U.S. Export Assistance Centers. Your city, county, state, or community economic development department, certified development corporations, micro enterprise development organizations, SBA lenders, your state USDA rural development office, and your regional SBA office. So there are lots of resources out there for you in regards to finding a business loan. All right. And so just a few key points to remember. So this is actually a part of a larger presentation, like a much longer presentation. So we didn't really get into like the actual financial statement piece of it, but we did talk about financing. That's going to be the way to get your money you need. But I mean, these are all good things, starting off with a budget, sound bookkeeping, that's going to be the basis for all financial management. So you definitely want to get connected with a very good CPA that will help you in that regard. I think Tim might have said this earlier, but basically like three main entities you need. You're going to need a banker, you're going to need a lawyer or an attorney, right, in order to review contracts and things like that, and also an accountant or a CPA. So once you have those three, that's really the trifecta. That's going to be your the consultants that you need to grow and sustain your business. Um, Here too, we're talking about your balance sheet, cash flow statement, profit and loss. Like I said, we didn't review that, but those are all very important statements to review, to understand, to know. Separate personal and business records and funds. That's going to be important from being approved from a lending standpoint, but also once it comes down to the end of the year and it comes time to do your taxes and you give your accountant all of this, they give you a bank statement and it's a bunch of Starbucks runs on there, or you got a bunch of Target or whatever, and you're like, all right, I don't know, I can't decipher, I can't differentiate. Well, that's a good reason to have your account separate, right? Because you can hand them your business bank statement, and those should all be your business transactions. And then there's no question at all. And then they're able to write off the certain amount of items that should be written off and the particular dollar amount. When you look at factors that affect your ability to get a loan, that includes credit score, equity contribution, repayment ability, as well as your loan to value ratio. So yeah, all very important information. So Tim, in conclusion, do you have anything to share before we wrap up?
I think we said a lot. I think it was very productive. This is probably my favorite thing because when you're getting down to the nitty gritty, you're looking at the finance piece or getting funding for your business. That's to me the most exciting part because you're ready to go. And hopefully, if you've done all your homework and you have some of the key pillars in place, you'll be able to take off. And hopefully, I'll be seeing you. Hopefully, Kevin will be seeing you.
Absolutely, absolutely. So I think it's a good idea. Let's just Tim, if you can put like your name, your email in the chat, and that way if someone has a question they need to reach out to you, please feel free to reach out to Tim and he can definitely assist you. I'll put my information in there as well.
And I can just tell you too, if somebody asks me a question about something, there's a good chance I'll know the answer. If I don't know the answer, or if something you're asking is something that I would be able to send somebody to. Being a small business banker, I network all the time, and I might find businesses that might be able to help you do what you're doing. Something that Comerica doesn't do, But I might know somebody, and I might even throw something off Kevin. He's like, well, hey, I've got a friend over here that can help you. We want to help you. We want you to be successful.
Perfect. Well, thank you guys so much. Really appreciate your time coming in to speak and give all of this great information to the different entrepreneurs and small business owners that we have in our ecosystem. It's been a great business sense boot camp once again. And so just really want to give you all of our appreciation and gratitude. We certainly enjoy having you here and helping our small business owners get the direction and information that is so necessary to their business and their success.
Absolutely. Thank you for having us. Tim, appreciate you joining.
Yep. Have a great day, everyone.
You guys have a great
Bye.
day as well.
Thank you. Take care.
Bye now.
Bye.